What's up, guys? This is Spy on the daily time frame. I want to show you today a few things since it has been a while that I didn't make any video. So let's see Spy. Spy is in a downtrend. We had two great green days, and then today went up and then it totally sold off. We are at the top of this downtrend channel, and what it appears to me here is that it could be this level could have been just a retest over here. Oops, it's not working. Let me see. Okay, there it is. It could be a retest here. It got sold off. It closed below. And so from here, we could go down. There is a small gap to fill over here. And also the top of the volume is here. We have approached this area in which there is no volume, and that's why it's sold off. So I think that it could be weak. Um, why? Because the MACD, as you can see over here, is crossed to the bears. I mean, it's curling, it's going up, but again, this thing can easily go up and then simulating like a crossover, and then it turns back down and the price goes further down. The PMO is not even curling, it's just going down over here. So I think that SPY could be bearish. However, tomorrow and Wednesday, Powell is speaking, so that can bring a lot of volatility, and that's another factor that you may want to consider. Now, let's skip and let's jump from SPY to the Qs. Let's see the Qs. The Qs, it's a similar chart to SPY. However, it's sold off here. Let me highlight it. It's sold off over here, but um, the 5 days double exponential moving average is crossing to the bulls, and the 20 days is above the 50, this red line. So it's a little bit, the Qs are a little bit stronger in my opinion than SPY, but it's still outside this channel. Okay, so eventually we'll go back down. The MACD is the same thing. The MACD is crossed to the bears here, and same with the PMO is crossed to the bears. So that is not a strong sign in my opinion. Now, to confirm all of this, let's take a look at the VIX, because the VIX is really important to keep an eye on. All right, so the VIX has approached this trend line. It closes below, but as you can see here, it closed below and then it went up. So the VIX is not helping us in this case. Why? Because the PMO looks like it's crossing to the bears, and the MACD is already crossed to the bears. The 20 days double exponential moving average is above the 50, but it's going down. The 5 is crossed below, and the 50, it seems like it's curled and is pointing down. So, at this point, I would check for the VIX at this level over here, and eventually this level over here, you know, a little bit below 18, between 17 and 18. If here bounce up or here goes down and then bounce up, then we will have a confirmation the SPY and the Qs could be bearish going forward. For right now, it's really hard to predict a price action. And that's just what it is. Now let's see the TNX, the 10-year treasuries. The 10-year treasuries kind of sold off. Actually, it opened lower, it gapped down, but then it closed the gap and it went above. And remember, when this is just my rule, when the 50 days double exponential moving average is going up, I rarely short, because this is a sign that there is strength. So every time the stock closes red or the ETF closes red, it's an opportunity to buy the dip, especially if the MACD is crossed to the bulls and is going up, and same with the PMO. So right now, I want to see what TNX does, because it can easily come down and retest the 20 days double exponential moving average. It can come down here. But after that, if it bounce, then I'll buy the bounce. It could also be just a retest of the previous high. Okay, so this can go up, can bounce here and then go up, further up. I mean, the trend for the TNX is up. If I zoom out, you can clearly see that the trend is up. All right, so that is TNX. And lastly, I want to see, but this probably is not going to work now that I'm trying in live, the dollar. And sure enough, this thing is going to load forever. So let's skip the dollar for today. And I'm going to make another video about Tesla.